Why do consolidation ranges keep letting you down? It goes into a tight range and it looks great. Check out this example in TRX. It's been making lower highs and lower lows. It then consolidates and then breaks down. You think, fantastic, I'm going in. Beginner traders look for nothing more. This is what they've been taught on YouTube and this is what they trade. So you put on a short position, put your stop above the recent higher high, profit target you're not sure of because you have no other context, and you go in. And you stopped out. It looked good, but now you're getting higher highs. What went wrong? Here's another example. Tight range breaks down out of that range. And you do this setup. You put your stop loss just above the top of that range and you put your profit target, Lord knows where, because you've no market context, and you go in. And you're wicked out. If I say to you, how many times does this happen to you? And the reply is, too many, you're in the right place, believe me. Because before I started understanding how institutions trade, this happened to me a lot. Not anymore though. What we're looking for in consolidations is real compression with intent, not just noise in a choppy market. Let's get into some examples and let me teach you how I do it in reality. Have you ever felt when you take trades that the institutions automatically know where you've placed your stop loss? There are conversations about this in trading groups, right? They always know where I put my stop loss. This is not fair. They always stop me out. That's actually not the issue. It's not that they understand how you trade. It's that you don't understand how they trade. And just like you, when I first started, I was complaining about how they seem to know everything. But then I decided I need to really learn how to trade. Hence why I wrote PulseFlow as part of that journey. Let's get into various examples now of when accumulation happens, what is actually going on, and what we should do before we take a trade. Let's go back to this TRX example to start with. I can see immediately here, when I see this pattern now after you took that losing trade, that this was clearly something called AMD, or accumulation, manipulation, and distribution. Let me show you this image. I got this from a post by Lux Algo. I use their indicators for fair value gaps and order blocks. I mention them all the time in my videos. They're a great bunch of people, so shout out to them. Let's look at this. Accumulation is where the institutions accumulate during a session. Then they manipulate the price down, knowing all the time that they're doing that just to grab liquidity, and then they will distribute it up. The reason they do that is you and I might trade with a few $100. They trade with hundreds of thousands of dollars, and just finding that liquidity to place those orders is very difficult. So they have to do this to stop all the beginner traders out and take that liquidity so they can get back up. This happens so often that I actually write this within PulseFlow. You can see here a great example. SIN USDT. The Asian market, or Tokyo, was accumulating. London was manipulating and New York was distributing. And if I quickly take you to that chart, you can see at that day, Tokyo was accumulating, London manipulated, started to take it back up, and New York session continued that up with the distribution. And they do that because they're searching for liquidity. So here, that's exactly what they did. It was accumulating on like this. Down for a manipulation, up for a distribution. But my question to you is, what is stopping it now at this point? Why is it struggling to go any higher? Let's let this play a little bit. There's like some invisible force above us that's stopping us from going any higher. And we don't know what it is, but it's really simple. And in my previous video in this course, I did go through this. But look, it becomes obvious once you turn on order blocks that they were manipulating to distribute the price up again to grab this liquidity up here in these order blocks, then take the price down. And I bet you if we let this play out now. And look at that, look at that, look at that. You see how initially it bounced off this bullish order block, got some liquidity, went up a bit, came down, went up a bit, and finally broke through it because we're in a bearish market. And down we go. So be careful and watch for AMD. Go and research it, go Google it, go learn about it. Now let's go back to farm where you got wicked out. Take off your old order and have a look around. First of all, points of control. In my previous video, I do a deep dive, but let's have a quick look. This would have been the point of control for that day of trading. This would have been the one for yesterday. And look, it's exactly at that consolidation line. So let's turn it into a point of control for yesterday, which gives us more context. We also know there's nothing beneath us. There's no points of control beneath us. So we're in no man's land when it comes to profit targets. Let's try order blocks. Oh, okay. Now do we see why they wicked you out? They completely wicked you out, right? Took the price down, got you in, to only to take you back up into this order block and grab that liquidity from you above the point of control, the upper range of the consolidation, and they took your money. Had you have seen this, you wouldn't have done that. Now, when I place a trade, I always wait for a fair value gap with a break of structure. You can see the bullish one here, but you can also see a bearish one here. Let me just turn order blocks off for a second. You can see this bearish one here. Now, I'm a conservative trader. When I put a position on, I expect it to come back up into my zone here, and then I will buy it. That's what I'm after. Also, in terms of stop loss placement, back on with the order blocks, I'm going to place my stop loss way above here, out of the way of those liquidity sweeps. So now we don't know where our profit target will be, but let's see what happens when we trade this. We're waiting. We're in wait mode. If it shoots straight down, so what? Well, there you go. We got in. We got in here, and then actually it came back up and took us into a slight loss, right? But nowhere near our stop loss. And then, because we're in such a bear market with BTC dropping nearly 50%, I felt confident that that would work. So now going back to nothing on the chart, it looks naked. How could you be confident to take that trade? Learning how institutions trade and where they're searching for liquidity will save you losing so much money, keep you out actually of many trades. And they say, and I say this on my courses all the time, sometimes the best trade is no trade. So the shift is from trading patterns, trend lines, consolidation lines, to reading control, to understand how the institutions can manipulate the price to get the liquidity they need. And what I have to say to you is, do not be their liquidity. So with this, consolidation breakouts stop being bets and start making sense. Thanks for getting to the end. Please subscribe, like and share, and I shall see you in the next course. Bye bye.